Silver has always lived in the shadow of gold. For centuries, it was seen as the second precious metal. Cheaper, quieter, less glamorous. But today, that perception may be dangerously outdated. Because behind the scenes, silver is becoming one of the most critical assets in the global economy. And as we move toward 2026, silver is no longer just a metal. It is a pressure point. In this video, we'll explore why silver matters, how the economy depends on it, and why the future of silver could reshape markets, industries, and personal wealth. Let us start with a simple truth. Most people don't realize silver is not just money. Silver is infrastructure. Unlike gold, which is mostly stored and admired, silver is used and used heavily. Silver is essential for electronics, solar panels, electric vehicles, medical equipment, data centers, military and defense, technology. Modern life quietly runs on silver. Every smartphone, every advanced circuit, every clean energy system relies on it. That alone changes how we should think about silver's future. Now, here's where the real problem begins. Silver supply is limited. Silver is not mined like gold for its own sake. Most silver comes as a byproduct of mining other metals like copper, lead, and zinc. That means silver production cannot easily increase just because demand rises. At the same time, demand is accelerating from multiple directions. This creates a dangerous imbalance. One the market has not fully priced in. The global economy is pushing toward electrification and digitalization. Governments are investing trillions into renewable energy, AV infrastructure, AI and data centers. Defense modernization, all of these require silver, not as a luxury, but as a necessity. Solar panels alone consume massive amounts of silver. Electric vehicles use far more silver than traditional cars. AI servers and data centers require ultra-reliable electrical conductivity. Silver's specialty. This is not speculation. This is engineering reality. Now let's talk about something even more important. Stockpiles. For decades, silver stockpiles have been declining. Much of the silver used in industry is not recycled because it is used in tiny amounts. Recovery is expensive. It is embedded in complex devices. Once silver is used, it often disappears from circulation. This is unlike gold, which is recycled and stored. Silver is consumed, and a consumed asset with rising demand becomes strategically valuable. This is why some analysts call silver a strategic metal, not just a precious metal. In a world facing energy transitions, supply chain instability, geopolitical tension, materials that support technology and defense quietly gain power. Silver sits at the center of that equation. But the market price doesn't reflect this reality. Why? Because silver is traded like a financial instrument, not like a critical resource. Papers, silver markets, futures contracts, and speculation dominate price discovery. This creates a disconnect between physical silver demand and financial silver pricing. When that disconnect breaks, price moves can be violent. Now, let's look at the economy as a whole. The global economy today is fragile. Debt levels are historically high. Currencies are being diluted. Trust in institutions is weakening. In this environment, assets that serve both monetary and industrial roles become unique hedges. Silver is one of the few assets that acts as money, supports technology, protects against inflation, and is essential to future growth. That combination is rare. By 2026, multiple forces may collide. Rising industrial demand, limited mine supply, declining above-ground inventories, currency uncertainty, geopolitical stress. None of these alone guarantees change. Together, they create pressure, and pressure always seeks release. Now let's talk about investors and why many are unprepared. Most people view silver as too volatile, too cheap, too boring, but volatility often signals not irrelevance. Silver's small market size means even modest capital flows can have outsized effects. Unlike stocks or bonds, silver does not depend on earnings or promises. It exists, and in times of systemic stress, that matters. There is also a psychological aspect. Silver is accessible. Unlike real estate or large businesses, silver allows everyday people to participate in hard assets. That accessibility makes it socially powerful. When confidence shifts, Silver demand can rise fast, sometimes faster than supply can respond. Now consider this scenario. A global push for clean energy accelerates. Defense spending rises due to instability. Mining supply fails to keep up. Inflation remains sticky. Currencies weaken further. In such a world, silver is no longer optional. It becomes essential. And essential assets behave differently. This doesn't mean silver guarantees profits. No asset does. But it does mean ignoring silver entirely may be riskier than holding it. The biggest mistake in finance is assuming the future will look like the past. Silver's past price behavior reflects an old world. The future economy may demand a re-rating. The key question is not, will silver go up? The real question is, what happens if silver becomes scarce at the wrong time? Scarcity during economic stress creates leverage, not financial leverage, structural leverage, and structural leverage reshapes markets. As 2026 approaches, silver sits quietly between two worlds. The old financial system and the new technological economy connects money, energy, and innovation. That is why silver deserves attention, not hype, but understanding. History shows us something important. Major economic shifts rarely announce themselves loudly. They build slowly, then move suddenly. Silver may be doing exactly that. The future economy will reward those who understand systems, not just prices. Silver is part of that system, and whether it explodes, stabilizes, or restructures, one thing is clear: silver will not remain ignored forever. This is not a prediction. It's an observation. And in economics, observations matter more than opinions. The silver economy is evolving. The question is not whether it changes, but whether you notice before everyone else does. And